you're going to embrace the future and bring talent, you got to build your entity to support that.
Today, I'm here with Curtis Barton, CEO and founder of ALKEME Insurance. Curtis, how are you today?
Good to see you, Mr. Sica.
I probably know Curtis for about 2 years. He was introduced to me by Boris Gutin, who I know for many years from GCP Capital here in New York. Boris called me up one day and said, hey, I'm backing this group out of California. Got this thing up to about 60 million or so. We're approaching fastly 100 million. And can we get involved in your deals? And I said, for sure. So he introduced me to Curtis. Curtis brought a lot of energy, a lot of excitement. I really enjoyed him right off the bat. I think any misgivings we had, we just had to clear up. I think it was more of a California, New York thing. I had to get him on New York time. And once I did, we really started to cruise. And I think, Curtis, you were, like I said, maybe 60 million-ish at the time, only about a year or a year and a half into it. And I definitely want you to tell your story because it's a great one, how you did all this, because it's amazing what you've done.
Yeah, absolutely. I mean, so as Al knows my story because he's heard it 1,000 times, I'll repeat it again. My father was actually in the insurance business, had an insurance agency. When I left to go to school, he sold the agency to his partner and retired at 52. I thought that was the end of that. So I went through school and came out of college, was looking for jobs. And he said, hey, I want to start an agency again and would love for you to come and help me. And I said, I'm not really interested in that. And he was a better salesman than me because obviously he brought me on. And we took that business and we grew it. We started with nothing and we grew it to about $4.5 million in revenue. And I've done everything in an insurance agency, literally from take out the trash to have a $2.5 million revenue book to running my own agency. At the 4.5 mark, I looked at my dad and I said, hey, you guys are having a fantastic life, Mom and you did a lot of lifting in the front. I'm doing the lifting now. Why don't you give me more equity or let me buy the company? He's like, why don't you go ahead and buy the company? So I bought it, grew the company to about 10 million in top line revenue here based out of primarily in Orange County, California. In Southern California, we operate in all 50 states, very niche driven agency, great lifestyle business, but I wanted more. I wanted to figure out how we got to the next level of growth. And so really kind of looked around and said, hey, I've got 9 of my friends that sit over at a cluster that we were a part of. And I talked to them. We were all kind of not happy with some of the leadership stuff that was going on there. And we basically decided to leave that and form our own affiliate group in 2018. So 7 of us actually then looked at each other. We got onto one system integrated. That's one of our main platform issues that Al, you know about. When it was not cool to do it, we integrated the system onto Epic, put everyone on Epic, standard workflows, optimized workflows, and worked to use our data to grow. We were growing at a double-digit organic growth clip as a group. We were sitting at about 25 million in revenue at the time. And we just kind of looked around the table and said, hey, guys, this is a great opportunity for us to do our own thing. I had spoken to the majority of our competition out there in a sales process. I was talking to strategic and financial engineers and not really insurance people. And by that, I don't mean disrespect to that. They're very smart people who've grown great businesses. But from where I stood, they'd never been on the floor and actually written insurance policies. They never really transacted insurance and understood how it goes from point A all the way through to point Z. And I didn't really see where the upside would be for me. And also, too, I was looking at, hey, if I'm going to go and sell my family legacy, I want to be able to partake in the accretive upside of that value in the stock. And so that's innately, it's kind of like you get an itch and you scratch it. That's exactly what happened is the market wasn't providing me what I wanted. So I just created my own mousetrap, if you will. And then, that's where Alchemy was born. And, it's in the name. It really is kind of taking 7 metals and forging them together to form a more formidable metal. And that's really how Alchemy was born. I didn't have to pay anybody for it. And Anton and I sat down at a table and came up with it in about 10 minutes. And the rest is history. But certainly meeting you, Al, was a defining moment in our strategic plan is that we were trying to get on the East Coast and we wanted to spread across the United States. We didn't want to be primarily a West Coast driven entity. And you guys were able to bring us all the way across the United States. And today we got physical locations in 29 states that stretch from Boston, Massachusetts, all the way over to Honolulu, Hawaii. We feel like we're building something different. We feel like we've got a different thought process to what we're putting together. And I think it's resonating with people as we're going through this process.
I think the interesting thing with Alchemy and yourself is you're definitely an insurance professional first. I mean, that's a big thing. And I know you always speak to that. Like you said, no disrespect to others, but there's been a lot of people that have succeeded in this influx of private equity capital into the space in the last 12 years that were more financial engineers. You bring the insurance element. You really were the guy that, went through the same process, others go through, and decided to, as we call it, become a tranche one. It's not easy. People think it's glit and glamour, but, taking outside capital, you're drinking from a fire hose. You're not drinking from a garden hose any longer. Those folks have capital they need to use. They're going to basically make commitment to you, and they want you to use it, not like at your leisure when you see a nice deal. They want to know week to week what you're doing. They want to know, that the numbers are coming. They want you to be disciplined in how you're doing it. But if the activity is not there, they're looking at that as well. So it's a double-edged sword that you have to play all the time. Plus, as you get bigger and you add more and more people into the mix, there's more and more problems you have, right? More and more personalities and more of this and more of that. I think you've done a really good job of handling all those things. I like the fact that you are hands-on as a CEO. Don't ever get out of the external growth phase of it, because it's all about the people you bring in. I think you've done a magnificent job, at least with us, in really identifying the right people and the ones that you wanted coming to play, and being able to capture those people and bring them in. And these aren't, people that are going fishing or golfing. These are people that are potential leaders of your business as you grow it. There's several examples of that already with people we brought in. So, it's been unbelievable what we've been able to do. I feel like even though I know you for 2 years, I knew you for, 25 years, we've built a really, really good rapport. We're proud to be involved. And I think the sky's the limit. I think some of the moves you've made and the things you're doing, and I like to take a little bit of the credit that have helped you guys frame some of the things that I've seen over the, the eight or nine recapitalizations we've been involved on, what not to do when you're making your next move. And, that's the big question. The marketplace is really continue to evolve, but it continues to change and move. And the interest rates have had something to do with that, made people much more select with their capital. But I do think that, you've managed it very well, and you've managed the equity well, which is the key to this. The equity is only as good as the liquidity. And we're selling people on joining you and growing with you. Be my partner. Let's grow. Let's all make a lot of money. So you have to be very conscious of that. You have to make sure that if you lose your sight on that, that you really lose your sight on what your real goal is. What are you trying to accomplish? And make sure you take the steps to get there. So, I'd love to get your take on the marketplace itself. How do you see what's evolving in the market with all the recent events on some of the things that are happening?
Yeah, it's really interesting because when we first kind of came up with the concept, probably 3 years prior to actually doing the deal, and we met with GCB Capital, and they actually turned us down. So resiliency is part of us, I guess. It's bred in us. We actually did our deal in the middle of the pandemic in 2020. We don't have any of the legacy issues that trap us down that a lot of our peer set competition does, which is running hyperbolic leverage points and really kind of buying stuff to buy stuff and stacking EBITDA. We took an approach early on to be consistent in how we tackle M&A. And really what it comes down to is being more rigorous in the process and looking for deals that fit what we're trying to accomplish long-term. We're building a forever company. We talk greatly about that. We're giving creative upside to people. So I'm 52 years old. I had a great lifestyle business. I mean, there's no shake about it. I mean, I had a great lifestyle business. I could have continued to do that and incrementally grow the business, but I wanted something more, and I wanted to provide other people opportunities to become millionaires. And that's what you do in this business. As you say, Al, you make a lot of people a lot of money, right? I mean, money's not everything. And then it's alignment. And then for me, at being 52, like they say, when your book of business kind of matches your age when you're in production, I had a $2.5 million revenue book myself when I was producing. Most of my clients were my age, right? And so you kind of attract the people that your age. So our average partners in their early 50s, and they're aligned for a 10-year horizon. We don't align around a 3-year exit, and we don't want what I call coupon clippers. And no offense to all the coupon clippers. I've got plenty of my dad's friends I play golf with who sold their agencies, and they're sitting on the golf course telling me how great their stock's doing and this, that, and the other. And really, I saw two problems that were happening in the space. One is no one was integrating. That was a major problem. The disparate systems, trying to get the information pulled together. And then the other part was just a hyperbolic pitch to where they were, acquiring and stacking EBITDA at a clip that's really unsustainable because you can't integrate it. you can't dice it up. And there's mistakes that get made during that process. And it's not that we're great at what we do. I think it's just that we were born in an era where we took to mind where we were born in the pandemic, with it being a small startup, as you know. You have a lot of rigor that's built in by your financial partners too. So you have to look at things a little bit differently, and you got to think about things differently. And, if you're going to embrace the future and bring talent to the table and continue to bring in youth, you got to build your entity to support that. And I don't think a lot of people have thought that deeply about that. They're kind of just running fast and furious forward. And I always tell you, and we joke about it. I said, look, if I had low interest rates, near zero interest rates and low multiples, and my only competition was Alliant and USI back in the day, I would have absolutely killed it. This thing would be 20 times the size it is today. The fact is, we came in, interest rates went up, people got caught in what we call the short squeeze. And then they started to take in all sorts of, detrimental picks into their debt stack to survive. And, that's an unfortunate situation, because where I stand, I have respect for all the companies that are out there, and we all want to succeed together. If one of us doesn't succeed, it makes the other ones come under more scrutiny. So I'm a cheerleader for the industry. I'm cheering for everybody to be successful, because I know their success paves the way for my success. Just like how we were able to pull those entities together and get private equity money, it's because the guys that came before us had already proved out that it worked. And so now it's just about refining it and taking your own twist to it and making it your way. And I think we've done a really good job. And I think part of it's I'm a Gen X, and I know it's a people business in the middle, but really, I know that technology is going to play a major role in how our company evolves, how the industry evolves, and how the world evolves. And so we're constantly looking at, hey, how do we take technology into the space, and how do we help that grow, our partners grow? One, hit their growth earnouts, but two, how do we help the stock grow and the enterprise value grow, and aligning everyone around the stock? And then the key part is providing liquidity, getting money into their hands and having them see that there is liquidity coming out of these deals, that it's not a forever investment that just evergreens. And I think that's one of the fear positions that I think a seller looks at when selling to a private equity entity. They always think about, like, hey, what's my boss going to be like? What's that person look like? I've never really had a boss. I'm an entrepreneur. The second part is I need my cash up front to de-risk the investment. Great. But is the stock really going to do what I think it's going to do? Or are they just going to give me a number and say it's a privately held company and not give me any liquidity on the backside? So I think where we're standing, we're positioned. They call us Goldilocks because of our size. Private equity loves the size we're at. The check is big enough and the return's still there. The upside's there. I think one thing that's come out of the space, Alan, you see it, we talk about it quite a bit, is that the run that people used to be able to, 15, 20-year runs that people used to be able to do with private equity, is kind of shortening down with interest rates being where they're at. So interest rates have been a big influencer on how our space has evolved. And everyone has now been forced to be more rigorous. So you'll see all the companies are going back down. They're trying to integrate, right? Well, that's a hard job when you've got 1,000 entities out there running around, and now you got to pull them back from the message you sold them on. So we've been clear and consistent up front, setting expectations up front, and making sure that we're aligned around what our common goal is as a company, which is to be Alchemy. We're not building Alchemy to sell to a strategic. We're not building Alchemy to sell to a publicly traded company. We're building Alchemy to be Alchemy. I know that sounds cheesy and cliche, but it's the truth. And I've said it since day one with you. We're passionate about it. We work harder than anybody. Al, you know that. You can call me anytime. Not a lot of time on the golf course, which is why my game is so bad. So, I don't think I've had a vacation in 2.5 years. Not sure that's healthy either. But, the bottom line is the business needs the care today. And we're passionate and excited about where we stand and what we're doing.
Well, no, and that's very well said. And, I agree with the bulk of what you're saying. I mean, I do think that, there are certain criteria you have to work towards to be successful, right? There's certain criteria that you have to work towards to attract another investor, because, that's how these things work. And I do agree with the fact that the marketplace has changed, to an extent where you're hitting certain levels. And, I'm sure a lot of the people that have gotten to the levels where they've got into the multi-billions of size and whatnot, never really intended to sell to a strategic either, or potentially go public themselves. I think people love, the from the beginning through the chase to, get to the billion seems to be the best time. And you can multiply the liquidity events in that period of time to really create generational wealth for these folks. And That's what's really happened in this industry, is that this little piece of equity that creates the alignment you talk about, that you give in the closing payments, some give them in the earnouts too, has really changed the whole game. I think on the larger side, we're seeing a little bit of a shift, like kind of a cycle that's, if you're not going to go public yourself, which we all know is difficult, now those public or great companies, the Gallaghers, the Browns, the Marsh agencies, sitting there and saying, okay, now we're the alternative. It almost is coming full circle back to them. They're unbelievably good companies. But I do think the evolution of this private equity capital has now created anywhere from 40 to 50 new brokers like yourself, has really changed the landscape. And it's interesting to watch. I feel my job is to stay in front of it all. We've been super successful in recapitalizing multiple companies, very successful on the levels of value we've created for these shareholders, including ourselves, to no secret that, we've invested alongside the ones we bring the money in. And like I've said in other podcasts, we don't influence our sellers on anyone we invested in. We let them play the games and whatnot. But, you've done a remarkable job in a short period of time of coming into our process. And the Sica Fletcher process, call it what you want, we think is probably one of the most successful processes in the country. Well run, successful. And it's not just me. I got a great team of people here, as you know, Curtis. But we think that someone like you, a lot of people want to be in it and get involved in it. And, it's like I say, Lay's potato chips. You got to win one first, and then it becomes more and more and more. But you, out of almost anybody, has done a remarkable job of coming into this process and making an impact very quickly. And I think a lot of that has the credit to you because of the way you position yourself, the way you present yourself, the way you make these people feel comfortable about what you're doing. You're a real guy. This isn't like, an ivory tower type individual that's coming into these things to impress and judge you by who you are and what you've done. You keep your hands dirty. And that's what I've done. And that's why I admire you so much. And that's why we've been successful as partners, because you've come in and made an impact. Didn't take you long to start winning deals in our process.
No, I think a lot of that has to do with just, again, I'm one of them, right? I've sat on both sides of the chair. I've sold my company. I've sat in the conversations. I've listened to the pitches. I've also been on this side talking to them. And I think you nailed it. I mean, we like to call ourselves an owner operators model or a blue collar model. We roll up our sleeves. We come to work. I mean, we don't, you'll see me in a suit when I need to. Not a big fan of it. You asked me this morning what I was going to wear jokingly, and you knew exactly what I was going to wear, which is going to be a hoodie. That's not again, it's who cares about all that? I mean, the bigger part is relating to people. It's a people business again, and people want to feel comfortable. And at the end of the day, when you're making a transaction about your life, which this is the single biggest transaction they're going to make, you need someone on the other side that cares about that transaction equally. Not just a financial instrument they can use, but someone that actually cares about, hey, what's going to happen to your people? How's your business going to function going forward? And how are you going to fit into the overall picture? And I know as you get bigger, it gets harder to do that, right? So we've been able to install that culture early and bring that culture through. And as you said, I mean, we're near 1,200, 1,300 employees now. It gets harder and harder to do that. And you're right. There's challenging politics and things that happen in the company as you grow, which I don't think people anticipate in the early phases. And you have to navigate through that and you have to grow up. And I think I've had to mature a lot as a CEO as well. Being a founder, you kind of come from a spot of necessity and naivete, right? Like I didn't know how hard this would be when we set out to do it. And here we are 4.5 years later, and you see the challenges that you face on a daily basis. You have to learn, you have to be a student, you have to pick up on things quickly. You're dealing with highly technical stuff from facility management to private equity and capital. You're dealing with people, you're dealing with positions, you're dealing with maneuvering inside the company. And then you're running M&A. And like you, Al, I mean, I feel it's super important for me to be involved in those calls because you can tell the story better than me. I was the one that was there, and that's how we relate. And I think that's how we've been able to really capture success with you. And I think you guys do a great job too, trying to match the seller with the buyer that makes sense. And I don't think you don't steer anything by any stretch of the imagination, but I think you realize, hey, I don't need to get Curtis involved in this deal because it's not going to make sense for what he's trying to do. You have a real understanding of the marketplace and where it's at. And so when we get left out on a deal, I don't sweat it because I know that you've already looked at it and said, probably not a fit for them when you go and you evaluate that. So, and then just, I mean, and look, you've met my wife, we've had dinner in New York. I mean, we have a great appreciation for each other. It's been a terrific relationship, and we source our own deals too, as you know, and there's other ways that we get deals, but Sica drives that market, and you can't deny the fact that you guys are the market leader in the space in terms of transactions being done. And so we've been fortunate, I feel, to be put in this position, and I feel, and I know we talk about this a lot, I almost care too much about the burden that we carry on our shoulders every time we do a deal because they're putting their faith in us, and we want to deliver on that.
I'm a big believer, as I think you are, in you don't forget where you came from, right? And, too many people read their press, they get big. I'm not one of those guys. I look back at when I started and how I started and think about all the things I had to do to be accepted when I started at 26 years old, when I was dealing with these 50 and 60-year-old owners who, treated me like their son. But, I made sure that I made my statement real clear to them that I was a peer. I wasn't an inferior to them. And I think that's what's helped me. And I think that's a personality thing. And I think your personality does to attract people is you come off sincere, you come off direct, you come off pure, you come off like a real guy. And that's what insurance brokerage is, right? It's a bunch of family businesses and entrepreneurs that live and die by the renewals, right? The renewals keep a lot of people in business, and for many, many years. The ones, as somebody said to me last week, this is a really good business if you're lazy. It's a phenomenal business if you're motivated, okay? And that's because of the renewals. And I think, it's proven that you built a business with your dad and then bought your dad out and even elevated it beyond. And then with the spearheading of getting all those other guys together, and then the spearheader of getting the private equity. That's why you're the CEO, because you are a true leader, but you lead by example and you get your hands dirty. And that's what I was always with. I never wanted to strive to be a guy that just got it and everyone else was working for me as I was playing golf and going, on trips and whatnot. I want to see that people see that I get my hands dirty and I'm working. They respect that. And I think you've earned that. I think you've built that, not just with the people you have now, but all the people we introduce you to. There's not many people at all that we don't introduce you to that don't come away and say, boy, Curtis is a really good guy, right? You bring it every time. You bring your A game. It's very natural. And like I tell everyone, don't ever get out of this M&A stuff because this is the lifeblood of what you're doing and what you're building. And that's what the strategy is. Everyone knows you're acquiring. The big thing is making all these acquisitions work together, integrate them, and create that growth organically, from this activity. Looking at Alchemy today, everyone's got strengths and weaknesses. What do you think your greatest strength is? What do you think your greatest weakness is? What do you think you need to do to build on both of them? And then, what's next for Alchemy? Well, where do you see the horizon, the future?
Yeah, I mean, I think from a strength perspective, we've got a lot of things that we can lean back on. I mean, number one, where we're positioned as size, our size really counts where we're at. We can still have a kind of a hands-on influence on the businesses around us and bring them in the right way. And we're fully integrated, fully migrated model. And so we've left all those legacy issues behind that a lot of other people have run into problems with. And it's not their fault. They weren't rewarded to operate the business that way. I always just thought differently with the technological background to say, look, if we're going to do things that are going to be cool and be innovative, we got to have the data where we can harness it correctly and get the packets of information out so that we can help our partners grow. I think the second part is we got the cleanest capital structure of the business. We're on one common share. There's no preference on either in the capital structure or in our debt structure. We have the cleanest debt in the business too as well. So from that position, when you're coming to look, hey, who do I want to join? The bankers don't really talk about the debt side of the business or the picks that are in there. That stuff can destroy equity, and that can create long-term problems and long-term holds, as you know, we've seen. And a lot of that's the legacy strap-on issues that some of our competition has had to go through. And so it's a giant conveyor belt in our business. And you're going to see a lot of companies are going to go public, and they'll create opportunity for other ones to step in. Some are being sold to the publics. The publics really are sitting in the catbird seat right now. So when you talk about our weakness, I think, ultimately, is the publics have a lot of money and a lot of cash. and they can do some unnatural things right now, and they can get some really good acquisitions going, where the rest of us that are kind of coming up the ladder, it's going to be a harder fight for us. We got to make that, that multiple that we're buying, that agency that we're buying, we got to not only buy it at a reasonable price, but we've also got to make sure that it does what it's supposed to do, which is continue to grow. And so really it comes down to how you pick your people. From my perspective, the weaknesses really lie in that, and this the pressure of where the market lies today. The time frame for these investments is shrinking. And so what you've got to do is position yourself, in my opinion, with optionality. What does that mean? That means you got to put the company in a position to win no matter what option comes your way. And so I think we've got roadmap to keep going private equity to private equity to private equity for a while. But at some point, when you hit that 300 million, 400 million EBITDA mark, challenging questions come up. Private equity is not as apt to want to put a check into that. And then you come into, hey, are we going to position to go public? Well, most of our industry's over levered, and to delever the business to go public is a tricky situation, as you know, and you've seen it happen. And so that's where you see some of our larger competition has just really sold to more of a public than to try to take the road of going public themselves. And a lot of that comes down to integration, having to go through that process, having to put everything back together as one company and make it sing as one company. We talk Alchemy from day one. It's not a matter of if we're going to allow you to stay who you are. It's we tell you that you're going to become Alchemy and you're going to integrate into our model. The people that do that and adopt that way and have been able to do that since day one, you can have 80% of your data in one place on one system with common workflows. And that creates operational efficiencies long-term that I think pay huge dividends when you're thinking about your exit strategy and what you do. Also, just staying down on your leverage. I mean, not getting addicted to debt. I had a friend that once told me debt's like heroin. If you get addicted to it, it can cause some major problems. So watching your leverage points, making sure that if you get in a position where you do want to go public, that you can actually lever down in an effective manner without having to wait 4 or 5 years to get yourself in that position. Not saying that public's the only route to go, but it's optionality. And what you want to do is create shareholder value, not only for your investors, but for your internal people, more importantly. And then let's not get lost in all the fuzziness. And the most important thing is a client. And that's what I think we bring differently too, to our advantages. We always I think client first. How are we serving the client? How is the client being taken care of? How are they being monitored and taken care of by all of our people in our organization? Because that's the renewal we talk about, right? And, people forget about the client and the reinvestment into the company too. A strategic plan to reinvest dollars into the company and having your capital aligned with that strategy too. That's a difficult thing because, as you know, private equity is temporary capital in your business. It's really contradictory to their being to want to really invest heavily into a company because they're going to exit it, right? And they don't really get to receive the benefits of that investment. So we're lucky with GCB Capital. They're very entrepreneurial, and they've allowed us to reinvest in the company. We've got a huge BI team or business intelligence team working on a lot of cool things with technology and whatnot. But that's very important to set out a strategic plan and say, we want to attack these 4 areas and we need the capital to do it, and have your financial partner realize that that's in the best interest of the company long-term.
Oh, and I think you feel comfortable from the conversations we have that you are integrating. It's not like you just now push a button. It's easy to do.
Nope.
Okay. But I feel that you have integrated from early on, and little by little, it's going to be more and more, which is key. And your organic growth has been good. All right. Can you speak to that a little bit?
Yeah, we've operated double-digit organic growth since inception. So, I mean, realistically, where we sit, we buy the right. That just goes to speaking. We're seeing the right deals from you. We're buying the right people, and then we're able to optimize their front side function so that they can actually grow organically, because that's free growth. I mean, every dollar of organic growth is like gold. And, people don't focus in on enough on that. And early on, when we started this endeavor, people never talked about organic growth, right? And then all of a sudden you had kind of an inflated organic growth chart that was going up and the publics were at double digits, and that's all come back down to reality. So the fact is you got to grow organically because that fuels your M&A, right? And once you start on the M&A train, you don't leave the M&A train because that's very difficult to do. And once you do that, you start to contract and decelerate. And we've seen that happen with multiple entities that are around. And there is a point where that can happen. And that usually is that delevering point where you're looking at, I need to go public and I need to really stop doing the M&A. I need to optimize what we've got, find out what we've got under the hood, because I don't even know what's in there. And then I need to put ourselves in a position where we can get sponsored to take public. And that's kind of, I think, again, timing of where we're at. When we did our deal in 2020, I would have said it's a horrible time to do a deal, but honestly, kind of a blessing in disguise in that we had to be really disciplined about our approach early on and how we thought about the business. And that really led us to have a lot of discipline in our function, to understand that we are going to migrate everybody to our system, and we're going to do it in a timely fashion. We're not going to put it out to 2 years. We're not going to let you go with your name for a bunch of time. We're going to bring you in. And there's benefits to that. And we sell the benefits. Everything we do, we talk about why. Why are we doing it? We want to make sure that all of our partners understand the power of why we are doing what we're doing. We don't just do things ad hoc because we feel good about it. We all know that if you cut producers' commission to 25%, you make more money. Fine. You also lose your producers. Yeah. So I think at the end of the day, to me, it's about growing organically at a strong clip, and you don't have to grow double digit. We've just been very lucky. Our cross sell has been strong. We put people together efficiently. We've set up systems internally. We built our own internal intranet that has like a chat GPT function to it. So basically you can query the system for anything you want, and it gives you all the data you need to support your decision-making in terms of, hey, I need to work on a security guard in Indianapolis. Tell me who writes it, and it'll pull out who writes the coverages, who you could partner with. It'll tell you what carriers we've been using. It'll tell you historical rating structures that we've used. And that's just competitive fuel that you can use. And so as a partner, we tell our people, don't try to do something that's unnatural to you. Refer it to another partner, let them write it, share in the revenue, and we grow enterprise value. And again, at the end of the day, that's what it's all about. It's teamwork, right? And you and I have played sports our entire life, and you're a baseball player myself for a while there. But the team effort, it's like, look, we're a team, rising tide lifts all boats. All those funny sayings that people say are all true. And getting people to swim in the right direction is a huge part of how you grow the organization. And it's not as easy as it sounds. As we've got 59 add-on acquisitions that we've added. And, that you're never going to be perfect. You're never going to bat 1,000, right? So look, 4 out of 10 hits and you're an all-star. So to me, we like to say, hey, look, 80% of our people are going to be swimming in the right direction at the right time. 20%, 10% we're going to have to work on. 10%, maybe we look at why are they not working with us, right? And then we figure that out. But as we continue to grow, that becomes harder and harder, as you get bigger. And we have this internal dialogue a lot about how our predecessors kind of grew their businesses, and were we right by integrating up front? Was it the right decision, or should we just ran forward and then figured it out? And it seems like a lot of people ran forward to about the 250 EBITDA mark and then stopped and said, wait, we've got to now work on the integration piece. So I don't think there's any right or wrong answer. I think it's more what fits for you and what you're trying to build ultimately.
I think a lot of it's evolved. The thing for you now, probably have learned, I know I have, from what we've done in the past, in the last, 11, 12 years, seeing these private equity backed brokers evolve in a big way. It's not like private equity wasn't here before the last 11, 12 years. It was, look, Alliant was the poster child. I mean, they were an incredible company, what they've done, and they really set the bar. But USI probably was the first one to take, with Cap Z, was the first one to take private equity money. And then, obviously Assured, who's now merging in with Gallagher. In the last 10 or 12 years, this is where really guys like you have evolved, and you benefit from some of the things they did, where back then, when that started, the decentralized model was really sexy, right? That was more sexy because that got all these entrepreneurs excited about being part of something, being a shareholder, lease change, and they could keep rolling and grow their business, and they were all aligned and whatnot. And everybody's become an opportunist, because when you look at these insurance brokers now, these private equity-backed growth strategies are not just insurance brokers. Okay, the evolution of adding, anything you were outsourcing, okay, is an addition, because it's an expertise you bring in, and that alignment of equity, makes everybody an expert. And if he's the surety guy and he's the construction guy and he's doing the best personal lines or EB, and we've even sold, tax advisory firms or auditing firms, actuarial firms, title, all that stuff into these. It's one-stop shop. So it's really evolved into something more. And the big thing is that's gotten real hot is the wealth management, where none of these insurance brokers would even touch it. I know you do it. Nobody's touched it. And, you're full service too. If you were a wholesaler or a retailer for all your life, 10 years ago, and you tried to do wholesale, it was taboo. Now, if you're not doing both, you're not competitive. Just like not adding all these other lines and all these expertise makes you much stronger, competitive, and much more like a full financial service operation to do it all. And it's really interesting how it's evolved. Like I said, in a short period of time, you built it up fast, and I think you've done great. So, $64,000 question, right? Is what's next? That, like I said, that equity is only as good as liquidity. We're selling it all to these people. Hey, join on. We're going to multiply the value. The equity could create more value over time than the whole deal. Blah blah blah. We sell it every day, and it's happened many, many times for me. Recaps that we've done and the things we've invested in. What's on the horizon? What's looking like? I know you can't predict the exact timing, but what do you see in the short term and into a little longer term for Alchemy?
Yeah, and what you're seeing in the space too is there's a major scarcity issue. So while there's 50 of us running around, they're hard to form, they're hard to keep going, they're hard to launch, right? There's a lot of risk up front. So where we sit today, as you know, we're in the middle of a process right now. It's called a continuation vehicle, where we'll have GCP Capital will stay on the front side. We'll get new investors on the back side. And even though it's not a formal change of control, we've convinced them to provide a liquidity provision for our shareholders. And that's important because we want people to feel the hit. Like most of these owners are dopamine people that are they love to sell and they love to get the hit, right? And so for us, it's like, hey, let's provide them some liquidity. Let's keep it stable on the front side. We know what we wake up with in the morning. We're not bringing in a new private equity group on the front and doing a total, what we call a change of control or recapitalization event right now. A lot of investors want to extend the cycle on good investments now. The CB is kind of a barbell where you used to have a kind of bad assets that would go into a CB and then good assets that go into CB. As you know, Al, we had our choice of anybody in the world to come in and do a deal with us in a high multiple. We could have got it. We could have gone for a full recapitalization event, but we thought it was super important for us to go through the CV process, give us some dry powder to move forward with, get some new partners on the backside that are huge names, which you'll see in the papers when it comes out, or the rags. I guess I don't do papers anymore, the digital rags. But the ultimate goal there is to make a spread and run next 3 to 5 years and do another full-blooded change of control recapitalization where GCP will take their profits and they'll move off and decide. GCP is been a huge backer of us and is completely rolling their stake in our company forward in the CV. And that's a huge, feather in our cap that they believe in us like that. And I am too. I'm the largest shareholder outside of the investor. So like I tell people, like, listen, you're getting on a plane and I'm the pilot. And when I get on a plane, I look at the pilot and I go, all right, I got to let go. He's incentivized to land the plane. That's the best I can do. He's trained to do it. He wants to land the plane. He doesn't want to crash the plane. So I'm going to go take my seat, relax, watch my movie, and let him do his thing. The same thing with us. Our job's to continue to grow the business effectively, communicate with our people, put a plan in place, and then continue to bring them through these events. And that's where the wealth's created, generational wealth, is through those recapitalization events. And where we sit, we're just right at the bottom of that upward swing where you're going to see that thing just take off and go up and to the right, which you've seen, Al, you've done all the deals. You know exactly how it looks. Yep. We're on the precipice of some real phenomenal growth and some really cool things happening inside of Alchemy. And I always tell people, like you went back to what we are. And some guys, they look at it, they say, hey, I've got a magic flywheel. I've got this, I've got that. For us, we call it a gold mine in the middle. And we tell people, get your pick, get your hat, go down to the coal mine and let's mine the gold. And that's really it. And while you're mining the gold out, you're actually protecting the client and you're giving them a better customer journey. That's the key. Because if you're not providing it and you don't have a resource for it, somebody else is, and they're not going to stop there. I've done sales long enough on the insurance side to know that they will creep all the way through every aspect of your business if you give them an opportunity to. And so our goal is to provide all of our partners with tools in their quiver to tackle any type of financial instrument, any type of insurance instrument, with trust and estate planning, to high net worth personal lines, to surety and bonding, to financial services, to wealth management, all the way across the board. And we've got it right there. I mean, our core revenue is middle market SMB business. That's where we live. That's 60 some odd % of our revenue comes from that space. That's a sticky space. and then the rest is kind of split out between, benefits and personal lines and surety and wealth management. But, that core is the gold mine. And we just tell our people, look, we're going to show you, not only are we show you how to go and mine the gold, we're going to give you the equipment to go out and mine the gold, which is we give them dashboards and KPIs that they can look at. We give them data sets that they can do. We run AI functionality where we can actually sell for them while they sleep. And that's the future, is really embracing the change and really, turning and really leaning into that change that's coming, because AI is putting stressors on all businesses. It's not a speak word. It's not something that people just throw out anymore. It's real. It's here. And there's a compounding effect that goes along with that we're very cognizant about. And we're very dialed in on figuring out. We've got a group. That's all they do all day long, is figure out how are we going to use AI on our business, and how is that going to drive profitability and shareholder value, and how is that going to take us to the next level. And it's not a complicated business. I mean, and it by sitting and watching it. It's like, take care of your people, take care of your clients, take care of your employees. And then through that, you'll drive profitability. Don't make any unforced errors. Don't do anything unnatural that feels unnatural in the business. Don't twist yourself into something you're not. We don't have a wholesale arm to our business. I don't begrudge anybody that does, but we're very good at what we do. We don't need to have a wholesale arm to our business at this point. Would we in the future? I don't know. We'll see where that goes. But
you're an opportunist. That's just looking at the right people for the right reasons. And, it's been a great evolution. I will say that I think we at Sica Fletcher are very appreciative to be fortunate to help you, evaluate your next move, including the CV, and certainly being part of a potential opportunity to invest into Alchemy. We feel that we're real good business people and we're market makers in this space. I appreciate you addressing that. And it's great to be able to partner with guys like you who are like-minded. And, you still have to win the deals. You don't come into those processes and are guaranteed anything. The deal's only as good as it's being good for both sides. And at some point, you have to understand that and identify how to get the deal done that's going to make it work for everyone. I think, we've certainly done that with you and others. And, I think you've done a remarkable job. I think you're still in the first or second inning. You're just scratching the surface. Yeah.
We got a long way to go, and
a long way
happening, and a lot of value to be built. And you guys are a huge part of it. Again, I can't underestimate. It's like how we used to have the shirt in our fraternity that said, our fraternity's name that said "loved, hated, but never ignored."
Right.
Now, the Sica Fletcher team, you can love them, you can hate them, but they're not to be ignored. And I think that's how we feel about Alchemy too. It's like, look, we're here to play. We're serious about what we do. When I was a broker at my little $10 million revenue shop, I was competing against Lockton and Marsh and Aon on a daily basis. I didn't care. If you're focused on what they're doing, then you're losing track on what you should be doing for the client. And 100%. I love those opportunities. So for me, call me, David and Goliath or whatever you want to call it. I'm here to play. We're going to play strong. We're going to play hard. We play above the rim, like is using one of your phrases you love to use. I think that there's nothing that we can't offer a partner that any of our strategic, peer set can offer. And I think we've got the strongest position moving forward, because we're not saddled by all those historical issues. We're not anchored to those historical issues that some of the other ones have had. It's not that they did anything wrong. It's just the way that the market's evolved. And so we've come into a clean marketplace, and we've got a clean slate, and we've got our way of going about things. And now it's moving in a different direction where we're saying, hey, how do we harness this new technology? How do we make this thing really optimize everything for everybody? And how do we take that to the next level? Because once you get ahead on that, they can't catch up. It's a compounding effect.
Right.
So to me, you've got to realize who you are, where you are, and what you need to do, not only to attract new talent to the table, but to attract other partners to the table and grow your business effectively the right way. You start doing small deals, you touch them, you start losing money. How do you optimize that? Well, you can use AI to do that, right? There's things you can do that can help. And so high specialization, I took that from Risk Strategies of Mike Christian back in the day. We do a lot of deals where they're very highly specialized. We want to take that and call it pieces of the puzzle and put it into our puzzle, and then take that back across our entire network, right? And allow people to bank off of their specialty. So you're seeing brands come out, Alchemy Automotive, Alchemy Hospitality, Alchemy Security. We're really highly specialized, Alchemy Construction, and you're starting to see leaders emerge in these categories, and we're still a newer company. So you're seeing that happen. We've gone through the regionalization now. And we're at that point where it's really exciting, I think. Challenges still lie ahead for all of us, no matter what you look at. I mean, I wish, the Fed would make some moves on interest rates, would help our business, would help every business out there. We'll see what happens there. But, I firmly believe that if you do things the right way every day and you work hard and you're not just mailing it in, good things will happen. And the more chances and opportunities you have to swing the bat, the better off you're going to be to connect with the ball. And that's kind of where we sit. And that's what we do on a daily basis, as you know.
Well, listen, nothing good is easy. Okay. Anybody that thinks it is, they're not working. But listen, I think, you totally covered what I wanted to cover today. Great answers to the questions. Always a pleasure being here with you, and we're going to keep rolling. And this was excellent. I really appreciate your time.
No, I appreciate you having me on, and I love our relationship, like I said. And I think, it's really exciting to see where our business has gone and to see that passion that people are putting back into insurance. I'm seeing a lot of young kids who want to come into insurance because they're seeing guys like me, guys like Wick, and some of the other people that are out there that are younger and that are enthusiastic, that like it. And you're seeing people move and go, wow, that insurance isn't just a farmer's guy on the corner. It's something completely different. I can go multiple directions inside that space. Like I told you, if I ever run into any problems here at Alchemy, I want to come do what you do and make $1 zillion because it's a good business you got going there.
No, I appreciate it, man. And likewise. So this has been great. Unless you have anything else, I think we got a wrap today, and appreciate it. Really thank you for it.
Cheers. Thank you.
All opinions expressed by the hosts and guests are their own and are not necessarily those of Sica Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sica Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sica Fletcher LLC does not underwrite securities, nor advise on, nor affect transactions in securities for the account of others. For more information about your unique situation, please contact Sica Fletcher or visit us at www.sicafletcher.com.